Good morning, future millionaires. My name is Mr. Crypto, and welcome to the special edition of Crypto News Network. In our second edition of Beginner's Guide to the Charts. Okay, so if you found this informative or you like it at all, please leave a like, subscribe, tell a friend to tell a friend. This is for beginners information. Basically, if you know your stuff on this charts, then it might just be a little refresher for you. But either way, here at CNN, we're trying to get people that are savvy in crypto and are beginners. So this is one for the beginners. Okay, so stay tuned. Right. So if you saw our first part, you would see that it wasn't as detailed as this one. I thought to myself, you know what? If I was a beginner, I'd probably want a bit more detailed information. It was a little bit vague, the first part, and I did notice that I was calling the support resistance and the resistance support, so disregard that. But this one here, I think it's a better chart for a beginner. You can actually see what's what. You can pause it obviously at your leisure, and you can see what's what. But what I'm going to do is I'm going to go through what everything is again, just so you know what's what, and it makes more sense to you. So this is the Bitcoin chart, BTC USD on TradingView. Remember I said to you guys, TradingView is where you want to go. That's probably the easiest, most functionable way of trading, and for free. That is, you can sign up for a free 30-day, but you don't even need to sign up. You can just use their free account. You've got all types of different things that you can use on here. It's quite good, the amount of things that they give you. You've got on each icon here, you've got a different set of things that you can use. And I don't even know all of them, to be honest with you. There's still a few that I need to go through, but I'll be showing you the basics here. So yeah, right, so this is the BTC USD. Let's just go in a little bit more. Actually, let's go out and let's zoom in a little bit. Right, so you can see here, if you saw our first edition, you can see the Bollinger Band is this green line here. When it squeezes in tight, that's when the price is generally consolidating. By consolidating, I mean going in a straight line or going just a little bit like this. Up, down, up, down, up, down, up, down. That's generally consolidation. So if you see something like that, it's consolidating. It's basically gearing up, fueling up for the next move. Sometimes some coins take longer than others to consolidate, but generally the longer it consolidates, the bigger the push at the end. Alright, let's get rid of this. So, right, so, sorry, maybe a problem with this, wrong one. Yeah, you do find that sometimes TradingView is a little bit sketchy. You have to go back and then make sure that you've clicked the last one, and it does get a little while to get used to, but yeah. So you've got your Bollinger Band, so it squeezes tight. When it's about to explode, you'll see the Bollinger Band start to open up. So you'll see the bottom side there and you'll see the top side there. Now, if it's going to go up, you will see that the candles will be on the upper side of the Bollinger Band. If it's going to go down, you'll see this on the bottom side, like here. Like here. Zoom in. You can see, so it failed to go up with the Bollinger Band, and then here, so you know that it's going to be a continuation to the downside. So you know here that would be a good time to buy around this time. If you see the Bollinger Band opening up to the bottom side, if you see it opening up to the top side, then obviously it's a good time to sell if you're going for a short position. Zoom back out. So yeah, the Bollinger Bands just show you in a visual form again what it's about to do. Whether it's about to expand, it goes higher. If it's about to contract and squeeze, that means it's going to be lower. So then you've got your support line here. Now, your support line is basically the line of which buyers step in. Now, you can see here, the support line, when you're drawing your support lines, you'll always draw them at the lowest point each time. So what you'd do is you'd get a line and you'd draw it, and you'd make sure it touches that one, and you'd make sure it touches that one. Yeah, the lowest points. Before, when I drew this wasn't here, this area here. It's actually broken below the trend line, and now it's trying to head back up. Now you can see the resistance line is the top. That's the price that it failed to get above. Now you can see it failed to get above that time, failed to get above that time, and that time. Now what you do is you get your line and you draw it straight up, and you make sure it touches at least 2 to 3 points to confirm it. Now looking at the broader picture, you can see now that it's respecting these trend lines. So this is a good guide to see which way the price is going. So you can see it's going upwards. Now upwards means bullish trend. Yeah, so if it's going up, it's in a bullish trend. Now when the price is going lower, that's known as a bearish trend. Here's a better analogy or better picture of that. So imagine the bulls and the bears. A bull would be going up with its horns, and a bear would be pushing down. So when you hear channels or people refer to bulls and bears, this is what they mean. The bulls are the buyers and the bears are the sellers. Now you also get the bullish and bearish candles, which are the green full ones, and then you've got this one here, which is called a standard bearish, and then you've got a hammer spinning top and a lowered hammer, and you've got the exact same for the bearish. So when you see the same pattern but in a red, that means that it's going to be going down. So these are just good ways of visually seeing what's going on with the candles. Now if you aren't savvy with the candles, I will be doing an in-depth video probably in part 3 about the way that the candles move. But generally the candle will start off like a little bit like this, and then what will happen is as the price goes up, the candle will fill out in green if it's going up. Now the little stick is called the wick. When it goes down, you will see it will reveal the wick, so it will show you that if it went all the way up and it just went down a little bit, that means that the price just went down a little bit, and the same for this end as well. So if it's in red, that means it was lower than the last one. You can see here the wicks at the top and the wicks at the bottom. This one means indecisive, but then you've got a full one here, which means it's about to push it down. These are all bearish candles. So the general rule of thumb is if you see a green one full blocked up, that means it's a very good one, and if you see a full red blocked down, it's a bearish one. But as you go on, you'll start to notice the patterns in the candles. If you go closer, just have a look at what happens, and especially what happens when they get overbought. So you've got your bearish trend means pushing down. So that's where I've put an arrow here for the bearish trend. Now you can see the EMAs. These are the lines that the price respects, the averages. Your 20-day MA is a good indicator. The price tends to follow the 20-day MA is very good, and they tend to follow the 50-day MA very good. Some other traders, some other people usually use the 200-day MA as well, which is another one. But I just tend to use 2 of them because sometimes you can get too much on the screen. So you can see here your 20 and your 50. Now the 50 is more of a long term. It will tend to hit the 50 as a last line of support, but the 20, it tends to hug the 20. So that's when you've got good price action. When it stays above the 20, you can see here, see how as soon as it gets above the 20, it pushes up and then pushes up and then pushes up. But on the reverse, when it loses that, you can see here that once it gets below the 20, below the 50, it starts to shoot it down even further, and it finds it hard to climb back up. See, now you can see it will have a struggle trying to get above this area here. Now when the 20 crosses the 50, that's known as a bearish cross, because it's going downwards, so it's crossing over. So let me just see if I can get some lines there to show you. So there, So imagine this is the red line continuing and this is the blue line. Yeah, so that means that if it continues like this, it will be a bearish, and that's not a good sign, and it will continue to pull it down. Remember, this is the one daily. I'll show you other time scales in a minute. The one daily is probably a good indicator to see what's going on. When you're going into the 4 hour and the 1 hour, which is on here, these are closer time frames. You can't get a general bigger picture. You can get a better picture if you zoom out to the daily. If in doubt, zoom out. A lot of people always focus on the here and now and the close, what's going on right now in the close time frames, but with the close time frames you can't really see what's going on properly. So that's why you have to zoom out. Let me show you on the 4 hour. So on the 4 hour, let's see how it's zoomed in closer, and you can see more movement, but you can't see the bigger picture. But you can see, let's get rid of these. These are a bit confusing. Right, so you can see on here, it's had a bearish cross here. See it? Bang, it's crossed over, and so has the blue line gone down. So it's flipped, they've flipped positions. Now, just here, you can see that's bullish. It's just crossed again. So that's when it started to go up again. So that's good news. So you can see there was a bearish cross here, and then there was a bullish cross here, which is a good sign. And then you can see the price pushed up with the green candle, and it's on its way up still. So you can get a better picture if you zoom in sometimes. Here's the 1 hour. So on the 1 hour, on the 1 hour, it's actually showing that it's an actual bearish cross, so it's going down. So that isn't a good sign on the actual 1 hour. But remember, it's always really the daily you want to be looking at on the wider scope of things. So don't worry too much about the short time scales. Let's zoom out. Let's go back on the daily. Okay. Alright, so we've gone through those. Alright, so the channel now. So this, between this space and this space, let me get my actual pointer arrow, it's a bit better. Right, so between this space here and this space here, this whole area is called a channel. Now this is a rising channel, and it's a bullish trend. The trend of the pattern is bullish. If it was going down, it would be bearish, and it would be in a downwards channel. But this is an upwards channel. And again, remember, resistance line and support line at the bottom, the price of which it will bounce off or stay above. Sometimes it breaks below that, and that's what generally when it will go for the next line of support. These are your support lines. I should have named this really, but I didn't name it. This is your support line, this one here. So resistance here usually becomes support here. So when you've got a resistance, it will usually become a support line as illustrated here, and it will start bouncing off that one, and then it starts maybe another channel. It may start going this way. Let me just draw in an extra line to show you. It may start another channel. Let's see. See, sometimes you get triangles as well. So let's move this out of the way. Yeah. So sometimes you get triangles, descending wedges and ascending wedges. And then what will happen, see it here. Let's change color for you so you can see it better. Let's put it in blue. No, actually blue's not a good color. let's put it in yellow. Okay, and then put this one in yellow. Right, so you can see another pattern that's emerging. Now what will happen with an ascending triangle, as it will start to squeeze tighter and tighter and tighter until the price will break up either to the upside or the downside. On an ascending triangle it's usually upside, on a descending triangle it's usually to the downside. So this is all looking bullish. Bullish meaning good news, upwards news. When someone said it's looking bullish, they mean it's looking good. When they say it's looking bearish, they mean it's looking bad, it's going downwards. Okay, alright, so let's get rid of that. Actually, let's keep that there. Right, so this is your MACD. If you didn't watch the other episode before, this is a visual representation of the price. So you can see the red means selling pressure and the green means buying pressure. So here you would see a big amount of selling pressure, here a big amount of buying pressure. It's just a visual form so you can see rather than looking at that. You've also got your, oh yeah, by the way, it's called moving average convergence divergence. You don't really need to know the name of it, but it's just basically a visual form of the buying and selling pressure. Then you've got your RSI at the bottom here, relative strength index. This is again another visual form in wave format of how the price is reacting. Now generally what happens is, as it gets to this bottom level here, you'll get a spring back all the way to the top. Every time it hits this bottom line here, this is usually a good buying opportunity for it to spring back up to the top. As you can see, touches there. So here it'll probably spring back up to the top. If not, you can see there's a trend line where it's respecting, hitting there, hitting there, hitting there, hitting there. So it may only just hit there, but if it does break it, it's more likely to go all the way to the top and continue the wave pattern that you see here. Every time it goes below, you see it spring up again. So that's usually a good indicator. So yeah, that's a lot to get your head around for this second part. I think it's been informative for you. I hope it has. Please leave a message, like and subscribe, and I'll see you in part 3 for more. Alright, bye bye.